Let's talk about corporate income statements. So a corporate income statement is going to be similar to the income statements that you have been preparing for sole proprietorships or for partnerships. There's really just one big difference. And that one big difference is income taxes. So what we've been dealing with so far, you would find your income from operations, you would add other revenues and gains, subtract other expenses and losses, and that would get you your net income. That was the process that we would follow. Now for a corporation, there's this extra step, the income tax step that we have here. So notice, those first three boxes along the top, still the same. Income from operations, plus other revenues and gains, minus other expenses and losses. But instead of that giving you your net income, it now gives you something called income before income taxes. Then we can use that number to find our income tax expense. And that is how we will finally be able to calculate our net income. So it's similar, it's just this one extra little step in here. So let's work through an example and see it in action. So McNeil Corporation has the following information from the year ended December 31st, 2021. We have sales revenue, cost of goods sold, operating expenses, other revenues and gains, other expenses and losses. And then we were told we need to prepare a corporate income statement assuming a 20% corporate tax rate. So that's all the information that we need in order to prepare this statement. So all of that information is there still for us over on the left side. And then we can start filling in our income statement over here on the right. First couple lines, we're just plugging in numbers that we've been given. So sales revenue, $725,000. Cost of goods sold, $285,000. Now your gross profit. Your gross profit, we learned from an earlier chapter how to calculate this. Your gross profit is your sales revenue minus your cost of goods sold. So we would do $725,000 minus $285,000. And we're given a gross profit here of $440,000. Then operating expenses, we were given that number, so we can plug in the $80,000. Now income from operations. Income from operations is something that we have to calculate again. We'll take our gross profit and subtract out operating expenses. So 440 minus 80 gives us 360,000 as income from operations. Other revenues and gains, we were told were 55,000, so those will be added to our income from operations. Other expenses and losses will be subtracted, so we'll have to subtract out 48,000 to help us find our income before income taxes. So we take 360 plus the 55 minus the 48, and our income before income taxes are 367,000. So far, nothing has really changed from the income statements that you've learned in previous chapters. This step here is where things are a little different. We now need to find our income tax expense. We were told that we had a 20% tax rate. So we take that 367 that we found and we multiply it by our 20%. So we multiply it by 0.20 and we have an income tax expense here of $73,400. So that's how we find that number for our income statement. We take our income before income taxes and we multiply it by our tax rate. Now, our net income will be the $367 minus that income tax expense that we just found. So we subtract those two numbers, and we're left with a net income of $293,600.